In this video, I'm going to show you how you can do a top-down analysis using the one candlestick strategy. This has come as a request from many of you guys who have commented down below. You want to see me show you how to trade the one candlestick strategy or how to do your technical analysis using the one candlestick strategy from the monthly chart to the weekly chart to the daily chart up to the entry time frame. Now, if that is something that you like to see, stick around the video, watch from the beginning to the end so that you don't miss the important nuggets that I'm going to be showing you in this video. So with that being said, if you're new to the channel, leave a like, subscribe, and also comment down below, guys, with your thoughts. I am really asking you guys to do this because I have a target to reach 50k subs by the end of the year, and if I achieve that target, guys, I'll be able to release for you guys a full course that is going to help you as a struggling trader to succeed. So just subscribe the channel and let's get started, guys. We'll look at this illustration on gold. This time I'm using the dark background chart because some of you requested me to do a dark background chart for you guys. All right, so I'll switch between white and black background charts from time to time, from video to video, so that all of you guys are sorted who actually want different backgrounds for the charts. I hope that is something that aligns with you guys. All right, to do a top-down analysis using the one candlestick strategy, you are going to start from a monthly chart. All right, depending on how long you're going to hold your trades. Sometimes you may want to hold your trades for maybe a few weeks to even months if you want to position trade. So in that case, you can start from the monthly chart. But starting from the monthly chart when you're going to enter your trades on a lower time frame can also be very beneficial because you will be trading with a confluence of a high time frame trend. All right, so what you're going to do, for example, on gold here, you are going to go on the monthly chart, do your analysis on a monthly chart, look at what the monthly chart is doing. Is it trending up, is it trending down, or is it consolidating? So right here on the monthly chart, we can see clearly this market has been pushing up on a monthly chart, but we can also see on the monthly chart that the market has failed to break above that area. So the market is actually creating a consolidation for the last 1, 2, 3, 4, 5 months. The market has failed to go above that area right there. So it is caught up in this tight range right here. At the same time, in the bigger picture, it is going up. You right now know that the market is actually trending up, but for the past 1, 2, 3 months, it has been caught up in this consolidation right here. But your general bias is bullish on the monthly chart. So you come down, after you've done that, come down to the weekly chart and first look at the trend on the weekly chart before we go back to the monthly chart. So on the weekly chart, you can see that this area here, the market is contracting here. It is actually creating a consolidation here, or it's building up here in this area. But in general trend perspective, it is pushing up. So the monthly and the weekly are both going up, which means the daily chart should also be going up in a long-term basis, right? But before we go down the daily chart, we are going to go back to the monthly chart. Since we've confirmed the weekly and the monthly are trending up, we're going to go back to the monthly chart. We'll remove these drawings right here. Since this is a bullish trend, what do? We only mark bullish candles, the most recent closed bullish candle. Now, right now, this candle is printing, this one here on gold, this candle is printing. So we don't mark this candle right here. I am going to mark this previous bullish candle because that is the previous bullish candle that's closed. All right, so I'm going to mark its close. I'll put a line from its close to its low because that is how you do your markings of the one candlestick strategy. And then you're going to move this forward like that. You have that clean marking. Just to confirm, we can put a line there and a line at the bottom like this. So we confirm that is okay. We can remove the lines, and then I want to name this one monthly tradable zone or monthly zone like that, MTZ, monthly tradable zone. So I have drawn my monthly tradable zone, which is based on this candle right here. So now I am going to go down to the weekly chart and see if I can get a zone on the weekly chart. So go down the weekly chart. So since the weekly chart is also bullish, we don't mark the red candles. We only mark bullish candles. So which one is the most recent closed bullish weekly candle? It is this one here. So we are going to mark that candle there, place a mark on its close and on its low down like this. And then we project this further to equal the monthly zone, something like this. And then this, I'm going to name it weekly zone, something like this. Now I have marked the weekly, I've marked the monthly. Now I'll go down to the daily. On the daily, the market is pushing up on a general trend, but consolidating heavily on the daily chart. It is on the daily chart, it really shows you how much the market is caught up in a very tight range. You can see that the market is actually caught up in this squeezing wedge. It is squeezing into a wedge, something like this. You can see that it is moving from a larger portion of the wedge and it is actually squeezing. So this market here is getting ready to break out on a daily chart. But you can see that this kind of wedge or this pattern here, you know that this kind of pattern here normally breaks out to the upside. You guys know this if you studied chart patterns. You know that this kind of candles usually break up like that and continue. It's a continuation chart pattern on a daily chart. So since we know it's a continuation chart pattern on a daily chart, so we know that this is a bullish continuation. So on the daily chart, we are also going to look for a green candle to mark. This is the most recent closed bullish candle here, this one here. And so we are going to mark this bullish candle at its close. We move this forward, mark at the close and push forward to match the monthly and weekly, something like that. Let me zoom in so that you can see the candle that I'm marking. So the most recent closed candle is this one here. This one here is still printing, this one. That's why I'm not marking it. I'm marking the one which is closed. This bullish daily candle is the one I've marked, and I've moved its zone forward away from that candle to allow these other new candles space to pull back inside of it. So for the daily one, I'm going to name it daily tradable zone or daily zone, something like that. So that one is red in color. Let us go down to now the entry time frame, because these are the only zones I'm going to mark. I'm not going to mark the 4-hour zone. Why? Because I want to look for swing trades. I'm going to look for entries on the 1-hour chart or 30 minutes chart. So I don't need to mark the 4-hour chart. If you want to mark the 4-hour chart, then that one you're going to be doing day trading. You're going to be looking for your entries on the 5-minute chart if you mark the 4-hour chart. But I'm going to stop at marking the daily, and then I'll look for my entries on the 30 minutes or 1-hour chart because I'm going to be swing trading. So let's look at the 30 minutes chart for this case. You can see on the 30 minutes chart for gold, we can be able to analyze this clearly. I want us to first look at the monthly. You see the monthly chart here. When you marked here, when the month had just closed, that month had just closed and you marked this zone, you'd see that the market actually did pull back. It first went up away from the zone like that. If you were patient enough, you could wait for this for so long, wait for it to come back inside of the monthly zone. And by that time, the weekly and the daily tradable zones would also be very close here. And then you would get entries within this area when the market was inside of the monthly zone, and then you could be able to hold these trades long term. Even when it pulls back inside like this, you would get another trade or add on to your trade and then hold it continuously for a very long time. That is how you get a swing trade on a monthly tradable zone. But for this case, since we are getting a swing trade based on a daily entry for the current time that we are in now, we are going to look at this area here. But you can see that the monthly zone gave you many opportunities to enter. I hope you guys are seeing this and learning something from this. You can see here, you get many opportunities to enter on a monthly. And what you're looking for is this pullback that happened inside of the daily. You can see that the market pulled back inside of this red zone here, which is the daily tradable zone here. And then now you're looking for the market to break above the 20-period moving average. Let me turn on the 20-period moving average. So you can see you're only going to enter your trades when the market breaks above the 20-period moving average. Now, in this case here, you're going to get multiple entries, but you can be stopped out and get a re-entry. Now, the first entry we got here would stop us out. This one here, if you put your stop loss below here, you can see that the market would stop you out. If if you took that trade. That would be a loss. You can see the next trade closes above, and then you could enter from there, and then you look for a 1 to 2, 1 to 2, 1 to 3, whatever you want, okay? But a 1 to 2 is just enough. Now this trade would recover you this lost trade here, and then you would be in profit. But since I am going to hold this as a swing trade, what I do is that after I've entered my trade here, I hold this trade for a very long time. I don't actually use a take profit when I'm swing trading. I leave the trade open and just trail my stop loss. So for example, if the market keeps going up, I keep moving my stop loss and trailing the trade until I'm stopped out. That is how I do my swing trading based on this strategy. So this is not a bar replay video. I'll do a bar replay video some other time, guys, but I want you guys to first like this video, bring this video to 1000 likes at least, so that I can know that you guys are actually watching and you're learning something. Okay, if you like this video, I'll be motivated to bring you more content like this, guys. So this is how you do analysis from the monthly chart to the entry time frame if you're going to do your swing trading. But in this video, you've seen that you can enter on the monthly chart when the market, for example, these daily and weekly zones are close by here. You can look for entries here to hold long term based on the monthly tradable zone. You can also get multiple entries on the monthly. The way I've shown you here, I had 1, 2, 3 entry opportunities on the monthly tradable zone. Now when you look at the weekly tradable zone for the current week that we are actually looking at, is that the weekly reversed. So we'll trade a reverse on the weekly chart. So for example, like here, the market came and broke below the zone on the weekly chart. So this would signify that the market is ready to do a reversal. So in this case here, you are only looking for a reversal trade. So what you're going to do, you're going to use a Fibonacci to calculate how much of a retracement back inside of the weekly zone you want before you get into the reversal trade. So what you do is you can just draw from the most recent high up here and draw it to that low, this low here, down here, draw it there and project it forward. So you can see that the market pulls back inside of the golden zone right here. Some of you were asking me for the settings I use for Fibonacci. I'm just going to double click so that you can see the settings for Fibonacci. You can see these are the settings I use for my Fibonacci. That is it. When the market pulls back into the golden zone for Fibonacci, the way it did here like that, reach the golden zone, then you're going to be looking for your entries from the golden zone to short the market to trade that reversal going down. And this would give you multiple entries also to trade a reversal, because you see here it goes up, it comes back down, it goes back inside up. So you can still trade this one also by measuring the Fibonacci from here, most recent high retracement to that low down there, like this, to that low down there. So you can see that the market comes again back into the golden zone and then it starts going back down. Then you can also look for entries around that area of Fibonacci golden zone. That is how you trade the reversal in case you see it. You don't just trade continuations, you can also trade a reversal with this. So guys, I don't want to make the video too long. If you found any value with the video, guys, leave a like on the video, subscribe to the channel, and also comment down below, guys. Go use the link in the description to sign up with Smart Algo. You'll get very good entry points, entry signals on TradingView. Right now there's a discount if you use the code I'm providing in the description of the video. Thank you guys for watching. Until next time, peace and out.